I think this was probably the first investment the fund made, and it was in a company called Silicon Valley Bank. And Silicon Valley Bank is an interesting bank. I think they're still around. I don't know if someone bought them or not, but they basically were headquartered in Silicon Valley, and they're a pretty well-run bank. What they would do is they basically focus on venture-backed startups, which means they already had a bunch of money in the bank and so on. And then they'd focus on kind of conservative lending, usually asset-based lending and so on, to these companies. But what they'd also do was when they'd make the loans, they'd also take warrants from these private companies in addition to what they were getting on the regular loan term. So in like 99, middle of 99, when the fund started, the dot-com boom was, more and more fuel was being added to that fire, and it was raging. And Silicon Valley Bank was sitting on this very large number of, you could say a basket of warrants of a bunch of these dot-com venture-backed startups. Um, but when I looked at the valuation of the bank, it was very modest. It was just a small premium over book, and so there wasn't a lot of disclosure on these warrants in the filings. But you knew that they would talk about a little bit, saying that this basket of warrants, and you could look at the companies that they were doing business with. And so my take was that I actually believed at the time that the internet would be transformational. I just wasn't willing to pay 100 times earnings for pets.com.
Right.
And so my take was that, if I bought stock in the bank, then, I have downside protection because it's a sensibly run place, but it's got a moonshot built in if those warrants kind of come in and if this madness kind of continued. And I think in a very short period of time, we had a double on the stock, and other people started to realize that these warrants had value and such, and then we exited. And so that wasn't a holding we held for very long, but the thesis was, okay, we've got this basket there, which is giving us a kind of a unknown upside without downside. And unknown upside without downside is a really good mental model. In general, markets are very bad at pricing uncertainty properly. So there was no way for the equity markets to properly price that unknown basket of warrants. I mean, if they had done a disclosure which said, okay, look, here's the 200 companies that we have warrants on, and here's the number of warrants, and here's the strike price and all that, then you could, you could take 10 of them or 20 of them or something, and which were where most of the value was, and ascribe some value to them, which is probably the way it was, where probably a lot of the value was sitting in a few of the companies that they had. So that mental model that was used to make that investment was completely different than the model I might have used, let's say, to make the IFSCO investment, right? So they were different, and so you basically look at different situations, and you can come up with kind of different perspectives. Like if you look at the 3G guys, for example, the ones Buffett's partnered with, and you look at kind of what they've done at Burger King and at AM InBev, and probably what they're likely to do at Kraft, and now with this Tim Hortons acquisition, these guys can squeeze blood out of a rock, and so if someone were to make an investment in one of the things that they are into, you can probably assume that, whatever historic margins there were, they'll probably figure out a way to get some more out of it. And if the top line is stagnant or growing a little bit, they probably get a little more juice out of it. And so if you understood that about the manager, uh, then you could say, okay, if something that looks fully priced may not actually be fully priced because you're not taking into account the new manager and what he can do. So those are different examples of models you can use.
That's great. And so Silicon Valley Bank, how did you stumble across that idea? How does one screen for something like that? Or you can't really, right? So what triggered your initial interest to take a look at
that? I'm not sure exactly how it crossed my radar. It may have, it may have been on a list of, some companies or something that sometimes, they put up these lists of, I'm not exactly sure how it came up on the radar, but
Sure.
the thing is, I was at the time, I had made another investment in '95, which is about 5 years before the fund, on another .com type uh, stock, which was called CMGI, and eventually it went bust. Actually, they had their offices in Massachusetts, and CMGI had kind of investments in like 100 plus internet companies. And when I originally invested in them, it was very modestly priced. It was priced at just a small premium to cash. So again, it was like Silicon Valley Bank in the sense that they had all these, different investments, but you weren't really paying a lot. And this was in '95, so it was many years before the market went crazy, and we made a 100x on CMGI. So this is before the funds and such. And so I was lucky. I got most of it out before things crashed and burned. But and in hindsight, that was a mistake because I should have sold at even at 5x I should have sold because at that point it was already bubble-esque, if you will. But at the time in '99 I was looking to find vehicles like that, but I wanted to get more safety. I wanted the downside protected, and I think that's why when Silicon Valley came up on the radar and I looked at it in more detail, I kicked the tires quite a bit on that because I was always concerned about lending activity to these tech companies because how do you get your money out because they don't have much intangible assets. But on that front, what they did is they only stuck to venture-backed startups, which were already pretty high quality, and then they made sure they had enough protection on hard assets and such. So I think that worked out pretty good. But I would love to find something like that now. That'd be nice. The moonshots are always good if you can get them with no downside.